The following podcast was recorded on Tuesday, October 29th, 2024, featuring Jim Bianco of Bianco Research. To hear the podcast in real time, you can sign up for a free trial at biancoresearch.com or arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to Talking Data. I'm Kristen Radosh with Arbor Research and Trading, joined today by our commentator, Jim Bianco of Bianco Research. Welcome, Jim.
Thanks for having me.
We're anxious to hear your thoughts today on the election and the markets. We are 1 week away. And Jim, what is the latest from the betting markets?
So, as most people know, I'm a fan of the prediction markets. I think what they do is they summarize every piece of known information into one probability, and that is a good metric for us to use. And the benefit of prediction markets over the polls is whenever there's new news, a debate, an unanticipated event like a presidential candidate dropping out, another one getting assassinated attempt, you can go to the betting markets and they'll react immediately. So they can overreact. They give you kind of an idea of whether this is a non-event or an important event or what it happens to be. So with that said, let's go to the first chart. There's at least 12 betting markets that I'm aware of right now. The latest came online yesterday. Robinhood, the online broker with 24 million accounts, started a market to bet on either Harris or Trump. Interactive Brokers has their own market. But this chart here shows you the 8 oldest meaning that they're several months old, not much older than that, and largest of the betting markets, from Betfair to Sporting Bet. And then there's also predicted in Poly Market. Orange is Trump because that's his color, and blue is Harris. And right now, this market shows you about 62.8, called 63% for Trump, 36% for Harris. We go to the table, the next chart, or the table. Here's the 62.8. You can see how it breaks down. It's fairly consistent among all the betting markets. Somewhere between 60 and 64 is where we were as of last night's close on all the betting markets. I'm focused on Trump because he's in the lead. There is a very easy basis trade or arbitrage, and a lot of people are engaged in that, trying to buy the 60 markets and sell the 64 markets to try and pocket that difference. And then if we go to the next chart, which is the biggest of the markets, which is predicted, it's probably going to trade about 100 million contracts today, which should be, it's already at a new high. It is showing Trump at around 67% and Harris at around 63%. Predicted trades a little larger or higher than all the other markets. Part of the reason could be that this is a crypto market. It's on the Polygon layer 2 on the Ethereum blockchain. You need the USDC stablecoin to trade it. There's plenty of crypto people that would trade this. So the basis trade between Polygon and the Poly market and say, Kalshi is you'd have to convert out of stable coins and off the crypto market into US fiat dollars in order to do the basis trade. So that's why it trades a little out of line with the rest of them, is that the basis trade or the arbitrage is not as clean, but it's not that far out of line, 1 or 2 points, maybe 3 points from most of the others.
Jim, are the betting markets manipulated?
In a word, the answer is no. I don't think they are manipulated. I know everybody likes to think they are. These markets, as we're still looking at Poly market, they're futures markets. What that means is that after the election is decided, one contract will pay $1 and the other contract will pay $0. A futures market, to give a fair value of a futures market, you need 3 inputs. You need a spot market price, you need a cost of carry, and you need an expectation. So we go to the next chart. We need a spot market price. What is the spot market for the future, for the betting markets? Fortunately, I think we have a spot market. It is the election modelers. So the most famous of them, or the highest profile of them, is Nate Silver at Silver Bulletin. 538 also has one. The Economist magazine has one. These are statisticians that look at polls, money raised, early voting, advertisement dollars, lots of other inputs, put them all together into the mix and produce a probability of who's going to win the election. Now, the biggest driver of this is the polls, because you get them every day and it updates every day. So again, because Trump's in the lead, I'll focus on Trump. Here is the betting or the election models, and they're somewhere around 54 to 55% probability Trump is going to win. Okay, let's call that the spot market. He's trading at 55 on the spot market, but all the futures contracts are trading at 60 to 64. At least this is last night's close versus those were last night's close. That 66 was updated 10 minutes before we started. So he's moving ahead even more today, Trump is. So why are the betting markets trading ahead of the spot market? And by the way, in futures market parlance, we would call that they're trading in contango. Well, you've got, cost of carry. You got to tie up your money on these contracts and you don't get to earn interest on them. And it's less than a week. That's not important. That's kind of a negligible amount. Probably a bigger deal a few months ago, but it's not right now. But the other one is expectations. Look at the trend. The trend on this chart is higher. The expectation, so the betting markets are saying, okay, let's start with 54. Let's start with 55 is the spot market. And we can forget cost of carry. He's in an uptrend. One of these is going to be $1. One of these is going to be 0. So what is my expectation where Trump is going to be Thursday, Friday, Sunday? Higher. So I'm willing to pay a premium for him. If and when he were to stall out, then that premium could go away. Then the betting markets could trade below this spot market. We would call that in contango. So to answer your question, is the market manipulated? I would answer it by, is there an unusual price in these markets that I cannot explain, that make no sense basis the underlying fundamentals? And the answer I would give is no. I can't explain these prices through the underlying fundamentals. Also, remember, these are probabilities. I like to joke that, if you go on social media, somebody will write, Trump is leading by 20 points, 60-40 in the betting market. It's not a vote share market. That's not the way you look at betting markets. 66% means he's got a 2 out of 3 chance of winning the election. She's got a 1 out of 3 chance of winning the election if she's trading at 33. That means if you're going to run the election 100 times, I'll use Harris as my example, she's going to win 33 of them. Is this election going to be one of the 33 that she could win? Possibly. And that's the way you got to look at this. So anything below 66, I'd say is still a coin toss. He's kind of at the edge, the most you can get and still call a coin toss. And maybe, just a touch beyond that to say, no, he's now really got a legitimate non-coin toss lead, at least in the betting markets. We're 6 days or 7 days away from the election, and we're still in coin toss range. In all markets, except for Poly, that's kind of the one that's moving the most ahead. So no, I don't think it is manipulated. One last thing. As I said at the top, it is all known information, aggregated into one probability. For those of you who bet sports, it's the same thing. Why is one team a 3-point favorite over another team? All the known information suggests to us that one team should be 3 points over another team. Now there's unknown information that, might come to light, and then there's incorrect information. We were just wrong about the quarterback's injury, and maybe it was worse than we thought. And therefore it becomes very obvious the way he plays, or we were wrong about worrying about the quarterback's injury and that he performed as if he wasn't injured. Well, the same thing could happen here. We see the polls, we see the trends, we see what's happening. we say Trump has got a lead somewhere on the edge of between coin toss and a correct lead. It's very possible that when it's all said and done, we're going to find out we were wrong, like we were just wrong in 2016, that she outperformed the betting markets, she outperformed the polls, or maybe so there's circumstances that are still to come that may change this one way or the other. So that's why I said it's a good metric to tell us what we know and to express it as one probability. Does that mean it has to be right? No, it doesn't have to be. It wasn't right in 16. And that's why I bristle about people that say, well, the betting markets were wrong in 2016. And I say, no, everybody was wrong. All things were wrong in 2016. The betting markets were wrong, the polls were wrong, the experts were wrong, the markets pricing in the outcome of the election was wrong. All of them were wrong. So that's always a possibility too. But as we stand now, I would say no, they're not showing signs of being manipulated. Trump is leading at the edge of between coin toss and just being the leader in the polls. And that is to be believed, as far as what the betting markets are telling us.
How are markets reacting?
So if we go to the next chart, in the next series of charts, the question is, do markets pay attention to this? And I would say for the next series of charts, we'd say yes. And I'll use Poly as my example again, just because I'm using Poly. I could have picked any of them and it would give you the same thing. So in orange is the Poly market betting that Trump's going to win. And in blue is the 10-year yield. And the chart starts the day Biden dropped out. And you'd be correct to say it's hard to tell the difference between the two. Why? Why is this spurious? I don't think it is. Trump will cut taxes. Trump will deregulate. Trump will impose tariffs. That sounds like stimulus, cut taxes, stimulus, deregulation, inflation, and tariffs. That sounds negative for the bond market. As Trump's probability of winning goes up, so do yields. Go to the next chart. The next chart looks very similar. It is in this time, again, orange, again, it's Poly market betting for Trump, again, because he's in the lead, so we'll look at him. The dollar index. The dollar is moving with Trump. The dollar strengthens as Trump goes up. Now, you might say, so foreigners like Trump, and that's why the dollar is strengthening? Not necessarily, that's the argument. If we go to the next chart, I want to throw two of them together. The blue line on the next, and this goes back a couple of years. The blue line is the dollar index. The orange line this time is the 10-year yield. The dollar and the 10-year yield are the same thing. And so if US yields are going up, the dollar is going to strengthen. If US yields go down, the dollar weakens. US yields are going up, the dollar is going to strengthen. I would argue the driver here, the independent variable is the dollar, is the 10-year yield. The dependent variable that depends on the 10-year yield is the dollar. So the reason, so yes, as Trump surges ahead in the betting markets, you're seeing a response in two of the biggest financial markets, the US Treasury market in the terms of yields, and in the dollar because of the potential of yields going higher. You're also seeing this in the stock market as well too, with some of the supposedly UBS has in series that's called the Trump wins basket of stocks versus, or the Republican wins basket of stock versus the Democrat wins basket of stock, and the Republican wins basket of stock is outperforming. But if we jump to the next chart, just to kind of go back here a little bit more, I just want to point out a couple of other things. I'll point out this. So the blue line is Trump Media and Technology, or DJT is its symbol. This is the SPAC that bought Truth Social and owns Truth Social. It's up 350% in less than a month. Actually, I would argue to you that the betting markets are being restrained some in their volatility because you've got this very volatile meme stock in Trump Media, and it's moving with the orange line of Poly market up and down. And it is kind of the go-to speculative tool to bet on Trump winning the election because it's already up 350%. Whereas if you bought the Trump futures, which were trading in the 40s, and now they're trading at 66, you made like 50% of your money. I know I'm turning my nose down. I only made 50% of my money in a month. But where this, you can make 350% of your money, and it trades tens of millions of shares, $1 billion turns over in volume, and it trades with the betting markets. The idea here is the financial markets are responding with the betting markets, suggesting A, the betting markets are manipulated, and B, they're all moving in tandem. And then the final chart is the orange coin and the orange man. So poly market in orange, blue is the coin here, just to keep the colors differentiated, is Bitcoin. It's up to 73,000. Bitcoin has been soaring too with Trump. Now remember, in July, Trump went to Bitcoin Nashville, the Bitcoin conference, and was very pro crypto and very pro Bitcoin. And since that day, it's been argued it's a partisan coin. And as a partisan coin, it's been rallying with them too. So now you might ask, okay, what does it mean if Trump wins? Stimulus, tax cuts, tariffs, potentially more inflation. I'm going to draw a parallel with what happened with the Fed meeting on September 18th. The Fed cut rates, we've talked about this in previous podcasts here and in our dailies as well quite a bit. The Fed cut rates, the first thing that happened was the 10-year yield in a month went up 60 basis points. Why? Because people asked me, now that the Fed cut rates, what does it mean? And I jokingly said, it's all over now. The complete rate cut cycle was priced in the first day of the rate cut. So therefore, if you had any movement in markets, it would be because whatever we expected was changing. Well, the economic data got strong. The expectations were the Fed wasn't going to cut as much or slower because the economic data was strong. And we had the entire rate cut cycle priced in. And so we had to take some of the rate cuts out, and that's why yields have been going up, in addition to the idea that the Fed cut was not necessary. We don't need all those rate cuts anyway. If Trump wins, he's going to give us plenty of stimulus. We don't need extra monetary stimulus. That could create inflation. Well, similarly here, I would argue, what's it mean if Trump wins? It's going to be over with on Tuesday, that the entire expectation of a Trump victory is going to be priced into these markets. Then the question is, okay, this is what everybody expects. So you'll turn on Bloomberg or CNBC and they'll bring on some street guy or woman and she'll say, or he'll say, here's what we think is going to happen now that Trump won, A, B, C, D, and E. And then I would say, fine. And now prices can go unchanged every day. And the question is, which one of A, B, C, D, and E will not happen? Or which one will we get more of? Which one will we get less of? And then we'll have to say, thank you for the consensus view on what it means. That's already been priced in. What do we expect will diverge from that consensus view? And that's what we'll have to look at when we go post-election. What will determine that? The size of the victory. First of all, who wins? Harris is not that far away. I've likened it, because it's football season, to Trump's got a field goal lead or less than a field goal lead, and it's late in the fourth quarter. It's not that hard to imagine getting the ball back and kicking a field goal to win the game if you're Harris. Of course, you got to get the ball back and you got to kick the field goal. Those are two other issues as well. But it's doable, but we're running out of time here. First of all, who's going to win? Second of all, what about the House and the Senate? I could tell you I was going to update this later in the week in our stuff, in our daily, but the betting looks like it's 50-50 on the House, 50-50, and the Senate overwhelmingly is expected to go Republican. So a red wave is possible. It's not likely, but it is possible. The size of the victory, is there a mandate or isn't there a mandate? Does Trump win the Electoral College but lose the popular vote, meaning that he doesn't get a mandate? That will probably matter around the edges as well too. But I would say that the standard fare, well, Trump means stimulus and Trump means inflation. Yeah, that's why the 10-year yield's moving up. That's why all these markets are responding hand in glove with the betting markets. They're pricing all of that expectations in. So if the question is on Wednesday morning after the election, assuming we know who won then, what's this mean? The answer is it's over. Question then you have to ask yourself is, what of the consensus view will not happen or will happen differently? And then how do we price that in? Similarly, like I said, 9 rate cuts are priced into the market as of September 18th. So it's all priced in. Now, do we get 7 and 6? then we have to price in something one way, or do we wind up getting 12 or 13? But on the first day that the Fed cut rates, the expected cycle, because everybody on Wall Street came out and said, I think the Fed's going to cut 9 or 10 times. I was like, great, we've just priced in 9 of them. So there's no reason to do anything. Well, the reason prices are moving is the data became stronger, and the idea we were going to get 9 rate cuts is turning into 6. And the fear is a Trump victory. He's going to give us enough stimulus, and now the Fed's going to pile on with monetary stimulus. We're going to have an inflation problem next year. So that's kind of how you've got to view that. And as this unfolds, we'll talk more about what a victory, because it's not for sure. Trump's leading, but it's not a dead cinch he's going to win. What a victory and the nature of the victory will mean for the markets. But bear in mind, what the markets are doing now is they're pricing in the conventional view of what a Trump victory will mean, and that will probably be fully into the markets by election day or the day after election. And then if he wins, we'll start talking. If he loses, we'll see a big volatility event in the other direction.
So stay tuned, less than a week to go. Thank you, Jim, for your thoughts today, and thank you everyone for joining us. If you have any questions on Arbor Research, Bianco Research, or Arbor Data Science, you can contact us by emailing Gus Handler at gus.handler@arborresearch.com. Thanks again, and have a great week.